Okay. And okay, good morning. Let's get started a couple minutes early. This is Simon with TRADEnPERFORM Coaching. Just really quick, if you will read this, past performance is not indicative of future results, so you can lose a lot of money trading futures. Please be aware of that. I strongly suggest you use Apex Futures Funding or Top Step Trader to start off. If you can't do it there, you probably cannot do it with your own money, and you don't want to burn up your own money. Let's see what else we've got. If you, this is for educational purposes only, and please consult your registered financial advisor or risk trading plan before ever investing or trading any financial instrument. Let's do this really quick. If you'd like to get a hold of me, this is how you do so: TRADEnPerform@gmail.com. So obviously we have gone straight up, and now we have gone straight down. Right, and if you look at that balance there, this is the open right over here, and we're right into the 50 retrace for the open. You would expect a response of buyers somewhere in this neck of the woods, right? So what do you do when you have a PA that's all one way one morning and all one way the other? Well, the whole goal of this thing is just not to get tripped up when the market's in a transitionary period, right? So we'll use, just like yesterday, we'll use the first 5 minutes to determine balance. So if you look at yesterday morning, here, let me spread this out. That's what I wanted to do. All right, so this is where we cleared over that first 5 minutes. This is the orthodox close above right here, and it's really rare not to get a backside test of that before continuing higher. We just didn't yesterday. We basically we opened up, we established the range, and then after that 5 minutes we kept trucking, right? So I surrendered relatively early. So what I wanted to talk about this morning is, well, how do you know when to short and when not to short, right? So, and then I want to link it back to, when do you know you have higher odds of making money versus when you don't? It's not that this can't be shorted. It's just that we would have had a lot easier time if you're shorting, establishing underneath that 5 minute zone and pushing back, and then going back down. If you want to see how that would look, just go look at any day last week. It looks like this. And then load a few more days, and I'll reload it. So this is the January 4th, right? So you'll see, here's the open, right? Here's the open, and we're struggling to determine direction, and then when you get the orthodox close above, direction is determined. Now, I will say something about this. The long should hypothetically work better than the shorts, right? In this balance, like this is becomes an apex trap right in here. There's multiple trades that you could have looked at to go, okay, this is a trap one way or another. But the other piece is, what we want to do is, once it closes up here, we want it to come back and test. It doesn't always, right? Now what we count on is, when we get up to the highs, is that it'll come back to that 5 minute. When you're shorting above that 5 minute high, you're counting that it'll come back and retest. And that's fine. Usually what happens, like if you look here, see how this is an old 5 minute level right over here? If you look, this is an old 5 minute level. And we came right up to that, and then you got the signal. The difference was, yesterday was so strong to the upside, it was an OTF move, that it just gave no response off those levels. We got them, we got to that level, it counter-rotated that level, and it just didn't fall back. So part of that is in looking and going, hey, are we getting any rotation? Like you'll see here on this first break above, you get a rotation from 33 down to 95. It's at least a 30-point rotation, but what you really want to make this thing shake, rattle, and roll is 50-point rotations. The reason for that is we're usually burning up 16 points on our initial entry, right? So to get 30 is exactly a perfect scale, right? So part of this is looking at it and just going, hey, where's my scale? Where's my rotation? And how can I ensure how can I ensure that I'm getting that rotation to get paid, right? Is what I want to figure out. So if you look at yesterday, you'll see we just couldn't make it. Look, this is the first. It's very rare. We went through the entire day and we never made it to the bottom of the blue channel. It was just too strong, right? So that's okay. The weird thing about that is normally I would have expected that on like the first day of January trading, and instead we got it a week later, right? It's just weird price action to be contending with, right? So what am I looking for today? 5-minute balance zone. Which way is it going, up or down? And then the next thing that I'm looking for is I'm looking for my strongest algo setups, which are tweezer bottoms, super traps. Here, I'll show you. We didn't have any of the above yesterday, right? I'm going to have to go back a little bit further to find this. Tweezer bottoms. That's what tweezer bottom looks like. I prefer to have a dot in the direction that I want to trade in. Show up right here if everything else, all else being equal. This is a super trap. This one's to the short side, but you have the dots down, gets a clean close above, and then closes back in on one bar. I'm looking for that. Same thing here. Dots up, clean close below, dot up, lift. That is what those are the two things that I'm primarily looking for, right? And then I'd rather be long than short. Why? Let's discuss this for a second. I spoke to Sean yesterday, who runs a very specific trade, and he's like, well, he took a stop yesterday for I think $1,200 in one account, right? He's like, well, did I do anything wrong? You know, I don't understand why I got wiped. And I go, the only thing you didn't catch was that it was a gap up, open drive higher, that we were already in trend to start the day. And that what we'd had the prior 6 days was two-sided markets, right? We've been trading up and down, up and down, up and down, up and down. And the hardest thing to catch, and I have a difficult time too, right? When I see this, when we open up, and it's just on rails like that, you either can recognize it or you can't. There's no magical twist about it. But if you look at most days, see how we opened up here? Go through and take a picture of the opens, right? So here's a picture of the open from the 5th, right? So here's 8:30, and the first thing you see how this is 8:30 a.m. We traveled to the bottom of the channel, traveled to the top of the channel, almost back to the bottom of the channel. Then we ripped, and we traveled back down. So take a picture of this, right? Here, I'll take a snapshot so I can pull it up in a second. I'll spread it out. Oh, I can't now. There we go. Okay. Now here's yesterday. Okay. So that's what yesterday looked like. Here, let's erase all these lines. So that's yesterday. This is the prior day, right? So you maybe should have a picture of this going, oh, this, you remember a Sesame Street where it has one of these things is not like the other, right? This is what we're looking for. This is what we got, right? That, you need an early warning system, and there's no better early warning system that goes, hey, there's no even push into the channel, right? So make a list. If you got frustrated yesterday, I spoke to 3 people who took shorts. I talked to 3 people who took longs, right? Obviously, anyone who took a short was frustrated yesterday, right? So the first thing that we'd like to see is, hey, can it travel from the bottom of the channel to the top or the top to the bottom? That's the first thing I would like to see, and I would go, oh, I have some indication that there's two-sided markets. This only happens about 10% of the time, where even on trend day up, where it's just on rails, there's no give whatsoever on this. It's very, very rare. If we took 100 pictures, this would be the one, and then the other 99 would kind of look like this. Even on a day where we did drive ultimately higher, right, before rolling over, you would have said, oh, this actually has some give to it. This would be the 1 out of 10, if that, maybe 1 out of 20, and this would be 90% of the time, right, where we have this give back and forth. That's how you adjust quickly and go, hey, I'm going to pivot from one point to the other point, right? And that's why I was so cautious yesterday. And let me tell you, here's the hard part about it. When you balance in, what my brain goes is, okay, we've pushed up, we should come down here. Like, that's just what my brain says, is we should come down here, right? And the difficult part is my brain starts not accepting the price action that I'm seeing in front of me, because I go, no, this is what it should be. It should be doing this, right? So I go, this isn't real, right? In a bizarro way, I go, this straight up, it has to come back over here, right? But it never does, okay? Pause, let the market come back to you, and that's why identifying those rotations. So put a little note, take your journal, right, for this morning. Almost filled up this journal. Grab your trusty pen and write on top of the chart, right? I want to see up and down on the chart. Hang on 1 second here. Of course my pen's not working. Hold on 1 second. Down on the chart for trading. I want to establish 5-minute high-low. And then orthodox orthodox close above or below. And then what I want to see from that is this. So I know if this is my 5-minute zone, right? I know it should look like this. So if this is my high, this is my low. So my shorts are riskier above here because it could just push out straight like it did yesterday. But below, right, what I want is this, and then push down for either a scalp or a longer range push, right? Certainly the scalp, but what I know about the short is the short will use that 5-minute zone to target back up into later today. So I'm more willing to take longs out of support areas below for pushes back up, or algo areas that set up below for pushes back up. Whereas up here, I'm not as willing to short to get back in. I'm gonna have to see something really, really clear in order to take that trade. Okay? Does that make sense to everyone in the room, how I'm laying that out? Okay, so more willing to go long underneath for the push back than I am to short above for the push down. And again, the people who I'm hearing that are having the most success are not shorting. You can agree with it or not agree with it, doesn't matter to me one way or the other. I'm just telling you what the numbers say. It's the people that are having the best time putting up the numbers and putting up the most numbers are trading to the long side. And mostly a lot of the reason for that is they're just not getting smushed. Right? They're just not getting smushed. I'm going to reload and recalculate here real quick. So that's my 2 cents for today. And then I'm going to verbally go through the process of identifying where I'm looking for the various algo setups. But I don't have much else beyond that to say this morning. You know, we went straight up, now we're going straight down. I didn't look if we have econ this morning, so I'll look really quick. Nothing. Bar speaks at 11. Then there's a bond auction at noon. There's no econ. Argues for balance usually. Argues for balance. And then, let's see what else we could cover. We have a couple of minutes. That was kind of easy. Big wide ranges is, I guess, what I would expect would be the norm, right? And some variation on balance since we had that straight up day. But there's not much else to cover. I'm looking for, when I see an exceptional trade, I'll highlight it. But I see nothing exceptional. I see nothing exceptional going off in the market. If you look at here we can look at two things. Here's the ES excuse me, that is not the ES footprint that I'm looking for. Sorry. I'm looking for 16,758. That's the only thing I would add. 759. That's the 15-day moving average. And that's sitting right 759. I would put like a little zone. Let's mark it red. And that's where the 15-day is. Excuse me, 5-day moving average. And then if we go look at the profiles, which I don't think will shed much light on what we're looking at. So this is the overnight, right? You can see we're unfair pricing all the way down to from yesterday. That's value area low, if you want to mark it off, at 16,576, right? And you can see there's no gap fill to be had. That was actually the low right there. These are all single prints underneath 16,613, all single prints all the way down, right? And then you have single prints again right down here in this neighborhood. That's important actually. If we were to get all the way down, naked volume point of control, back in over here, and again some more single prints off to the left. And we can mark those off. I just don't want to cloud up the chart too much. I know pretty much where I'm looking to find responsive buyers, and if I were patient this morning, I'd really hope that we got below that 16,607, because there's single prints all the way down from there down to the low, and that's this. So we can kind of mark it off with a white line there. From here on down, oops, I didn't mean to do that. Just add that note. Single prints all the way down to Monday's low. One sec. So that's my 2 cents. Let's just take it one step at a time and let the market come to us, guys. That's my suggestion. We don't have to be super traders. We really don't. We just have to capture the trades as they set up properly. Does anyone have any questions about that? This is Monday afternoon swing low. It wasn't a very defined swing low. And then this is where the single prints begin. Okay? And we'll just take it one step at a time. And this is where the 15-day, that's my target up. Immediate target up is at 16,760. And that'd be a very nice trade. It'd be about 100 points. And I would not, again, be surprised because of the nature of the way we're trading to see just unidirectional move early in the morning. Just would not be surprised to see that. And then remember, we're not trading the market. We're waiting till the market gets in a sweet spot and gives us our algos, right? We really should care less. I realize this is more theoretical than real world. We should care less what the market's doing one way or the other. I know I'm the biggest sinner on that in that group of caring, but really what we should care about is, does it give us our signal or not? And that's all we're trading. That's all we have to trade. So, any cues? Everyone good for the morning? Just trade your plan, guys. Just trade your plan. All you got to do on 20 accounts is march it to $300 a day on average. Most people hit greater than $300 a day. If the stops are bothering you, send me a message. We'll work out a plan where you either trade it on micros or you trade it on different setups. Okay? I'm on 3. I already reset it, and I have my other charts up and looking. But there is no econ to drive us down or up this morning, interestingly enough. So whatever's driving us beforehand, that's the only driver that's out there until we get to the Fed speaker. So I would expect some variation on balance. And we're open. Again, let it establish the first 5 minutes. Be my suggestion. Again, there's going to be a lot of people who are going to look just to establish that low right there after that 5 minute, to have it just be that 5 minute low. So you know people are going to game for that, because that was the open yesterday. It was just open, first bar up, and that was it. It never broke the low. In which case, as of now, you're 77. no one attempting to push. We still haven't taken out Monday afternoon's swing or even tested it for that matter. They got close, but they didn't actually take it out. That's a tweezer's top with a orange dots down within the range. Just FYI, your stop would be about 16 on that. Okay, so I want to show that out, right? Up, inside the first 5-minute range, dots down, release to the downside. Does everyone see that? Randy, you see that trade? Ed, you see that? Nate? I'm not saying you should have taken it. I'm just saying that that's the setup that you're looking for, those dots. Yep. And you're looking for that on the long side in particular. Still within the 5-minute range that's been established. So this is a trap, but nowhere near the fourth channel, right? It's good to see up and down rotation. The rotation right now since the open is 76 to 12, which is just at 30 points. We'd like to see it at 50, 40 to 60 points. Five-minute balance is obviously established. So an orthodox close above or below will help us establish our bias one way or the other. That's which way we think we can push. Trying to save the 5-minute low, which means you can't have a 74.50 close, is what that is. about that, guys. Orthodox close below the 5-minute bar low, short side bias established intraday down to support levels below. So when we push back up, you would expect to push out of here into the downside, but it's somewhere between here and here, right? So, and you also got to respect that they're retesting the low pre-market, right? So now our levels are, we'd like to see an attempt at that 16,652, which would be yesterday afternoon's. It's the closest thing I could call to a swing low. There's really no swing low. And then the 16,624 area, and then single prints below 16,607, right? Pretty hard when it's all up one day and then they take it all back the next, but effectively that's what they're attempting to do. And if you're long, look, you can just wait till they establish above, look for the backside test and continuation for prices higher. There's nothing wrong with saying, hey, I think it's going higher and this is a double bottom or whatever. But just know there's going to be potential sellers inside of this, right? Because we're not the only ones to figure out the 5-minute zone, right? That's why it works. I liquidated another Apex account and of 150 and added another 100. So my goal is to rotate all the 150s to shut them down and slowly and then replace them all with 100s. Some people are objecting to the 100s because of the size of the stop. That's fine. You can do the 150s. I'm pretty sure I can do it with the 100s, so I'm gonna see if I can do that. If that fails, I would just go back to the 150s, but I'm pretty sure I can get it done with the 100s. Orange dot down. Remember, if you get above this point of control, this guy's trapped, right? He's trying to push to the low and hypothetically fails, right? So also remember, above, backside test, and green bar up would shoot you to the other side of the range. Again, I'm expecting some variation on balance. So see how that point of control is established above now, right? So this guy got squeezed. He pressed. He couldn't take out the low. They got behind him. They squeezed. So now what we'd like. So you had to be able to have some vision, right? Which is why I hate trading right around here. If it would stretch out and I get this, right? I test that 16,775 and I get a green bar up. I would expect it now to come to 6,716. What I would like for that to do is do that like down here, right? So I can target back to this 5-minute zone instead of having to trade within the tight opening range, okay? We don't always get it, right? So I think this is one area where this causes a lot of the members of the team members to get confused, right? It's two pieces. A place to stretch to so you don't get caught in chop, right? And the setup that you're looking for, kind of both at the same time, right? And then an uncomplicated area, right? So This is a super trap to the downside without hitting the fourth channel, right? So now I have conflicting signals. I would think this would be short coming out of there, right? Because I said when you push back in, there's going to be sellers in here, right? So a lot of what will clear up your trade is if you can push away from this area so you have a place to push back to, right? So I hope that, does that make sense? Guys, Ed, Randy, Dylan, Matt, Greg. And it may not even be necessarily location, Randy, but stretch and setup, right? And price action, right? And that'll keep you from getting frustrated of trying to flip back and forth. The only other way to do it is to somehow magically know that it's going to go up or it's going to go down, and then you just go, well, screw it. I already know it's going up or I already know it's going down, right? Occasionally you get to a market where you're like, I know, but it's so rare, for me at least. I gotta tell you, I am freezing in here today. I don't want to kick on the heater because it gets dry, but dang. I had my little beanie hat here somewhere, but I don't know where I put it. But it is just cold. And so what these guys are getting caught in, right, is look, there's sellers in here now. This established that there's sellers in here, and it doesn't mean it can't go up, but see how they're having to work against them now? That they may be able to get them, right? They may be able to work up against it, but now you're climbing, a very hard mountain to get above. It's much easier once they flip the momentum the other way and then take it in the direction of. But knowing this, see, to me, this part's important. I'm not going to sit here and try to grind up on this, right? I don't want to. I'm happy to get down here and push back over here. But I'd rather get above here, push back, and then see the long versus sitting there and trying to establish that, yeah, I know better than everybody. We're going to grind all the way through here. It's just a pain in the rear. So we're in our no trade area. I'm going to run back over and grab some more coffee over to the casita, and I'll be right back. balance. Back up. White dot up by itself usually fails. Not always. Again, so remember, the longs have an easier time getting through this than the shorts do, right? But we're in balance so far with neither side taking control. Okay, so just keep that in mind. And the PA is lackluster. If that prints, that should release with a 1-bar stop, right? So it'd be a 95 against the 10 to find out if it works or not. That should work its way lower. Again, within the context that it's still in the initial balance, and I favor longs over shorts in general, I'm just reading the PA there, and I'm saying that that usually should release to the downside, right? The stop on that would be whatever this is over here, the high, that 5-minute high. Like I said, I would have preferred that we pushed down and tested that 16,652 or the 16,624 back to this area versus trying to garner the short after a big up day. But the PA says exactly what it's doing right now is what it should do. And see how we have two-sided trade? We're going from top of the channel to the bottom of the channel, and that's why your shorts are working again. One of the most frustrating things is, so for the guys that like to short, right, you've got to be able to see that, hey, it can travel from one end of the range to the other, even in this micro level, to pick up your PA, right? And we've gone supernova over here. So what you'd want to see is it break above that 5-minute backside test in and then push back up, right? So basically, long story short, balance within the inside the opening 5-minute range. They try to establish to the short side. They have not established to the long side yet, right? And you would expect pushes up. See how these dots are getting some kind of extension underneath? You would expect that within this area to the downside, okay? And then they're going to have to work to get through this until they establish above, right? And what we'd like it to do now is push away, either up or down, away from this 5-minute level to give us targets back to it since we're balanced, right? Yeah, I heard you coming in. There you go. Have a great day. Bye, Super Queso. Yeah, I will. Love you. Bye. Back up into resistance. Again, what I'd like to see, another trade here. Again, all that's setting up, so that's all I'm pointing out, right? Be nice to get that PSC tested. And then a down bar from there should release. Or get above and establish the buyers are back in control. And slow pace. There we go. ES trying to perk up above its 5-minute of initial balance. There's a tweezer's top. Again, I'm pretty happy waiting for the longs. So see this is what you were looking for. See the same thing where I pointed out, I know I stepped away. Above, back, green bar up. The white bar, I would not take it on the white dot alone, but this next bar without the white dot is fine. Release to the upside. So now you're looking for the same thing over here. So now they're trying to establish the long side in control, which is totally fine. You would expect longs to work, right? This is what I was trying to point out is there's nothing wrong with the longs down here. You're just going to have to work through. There's going to be sellers in here, right, until we get above. Now we need an orthodox close above, right? And you have the potential for a super trap, especially if there's a dot on the right side and the left side. And it's a 1-bar stop. That entry would be at 10. And again, I prefer the longs over the shorts. The natural target is back up here to this 16.760, 16.764. And occasionally we just got to get lucky, right? We need to establish above, then pull back in, then give us the target so that we can hit that. So Ed, the way that you work through that on this, so I assume you were looking right here, or if you can send me a pic of what you're looking for, you just have to know that we're going to make it challenging to work through that, right? Because it would come all the way back against you, right? Long's about to establish above. Now buyers are in control. And now what do we want? Please test back in here for the push back up out here. Like, for example, had you entered here, what have you moved your stop to break even? What have you gotten tagged on that, etc., etc., etc.? right? But you got to figure out the mechanics of doing that so that you don't get frustrated when you take the trade. What time is it? Well, and the one element that we're missing here is speed, by the way. So, like, there's someone in the room who would take this trade right here. And what I'm trying to teach them is if they took this trade, a lot of times when they'll get here and in their head, they'll see, like, well, I've got resistance above, right? So as soon as I get this, I'm going to move my stop to break even. And I'm trying to help that person see that what you have to anticipate is if this is your long here, right, and you have this overhead from the 5 minutes, that you have to anticipate that they're going to come back and test. So that if you move your stop to break even, right, you're going to get stopped out and then go, see, I had the long and they stopped me, right? But what you have to put into that formula, there's nothing wrong with the trade, but what you have to put in that formula is you have to know that they're most likely going to push against you. They're going to push against you in that trade until, and if you mismanage the stop in that scenario, you're going to get hurt. Whereas this same trade that takes place, like you get up here, and then let's say it pushes down in here like this, and then you get the exact same setup and you go long, okay? That trade is less likely to retest the high and certainly less likely to stop because the momentum will have shifted for you for a push to the upside up to that 16,760 to 16,764. And a lot of times the difference between, hey, I had a really good day or hey, I had a crummy day lies in making the distinction between of how the PA is going to present itself, right? And then here's the other part. Here's the other part. Let's say you decided it was going to be short and you shorted here, you shorted this, and you shorted this. Well, we really haven't broken down. We have established below the low, but there's no speed in the channel. And what I would start to notice is like, oh, we're not hitting that fourth channel all of a sudden, right? In which case, what I would have expected is better, stronger pushes to the downside out of here, right? So when you're not getting that, what you don't want to do is lock up on this and go, oh, well now it has to be short up here, right? You don't want to start chasing this piece up here and going, well, it has to go down, right? You want to stay fluid in your thinking. So now for me, the easy way to do that is go, buyers are established. I'd like to test back in here, and I'm going to try to grab the long and test back up in here. And I'm going to stay cool. If it just does this and it's off to the races for up here, that's okay. Why? I could have easily said, hey, it's long side bias, just go long and ignore the 5 minute, right? But I'm looking at this over a long scope or a long period of time, right? How do I balance out the consistency part of it, right? It doesn't matter whether I get this right today or not if I can't get it right on 7 out of 10 days, right? And so what helps me is letting this establish my bias, right? And then hoping that the setup will come for it and adjusting my bias based on this versus using my profile chart to set my bias and then never figuring out the intraday little pieces to it, right? So someone could come back and go, well, hey, Simon, we went supernova, backside tested, orange dot over orange dot. That's a clear long, right? I don't disagree with that if you said that, as long as you do it every time, right? But what I want to do is use that 5 minute to just determine my bias, right? To determine my bias. And so therefore, if it balances in that 5 minutes and then breaks out and goes straight up, I miss on that, right? But that's part of a process. And so, and particularly I noticed with the younger guys in the room that they're constantly trying to adjust to what the PA is offering them that day, right? Like I saw several guys who did a good job, by the way, of going long, right? But they were going long off the highs. So I can do that, right? But then I have a very hard time not doing that over here and over here and over here and getting constantly stopped out, because my brain has this nasty habit of getting stuck in wanting repetition of the price action. I think most people do, right? So I've made a decision on the way I want to handle it, and we're all in fair pricing, by the way, from prior day. The way I want to handle it, right? So where I'd go now that we have this piece down, is I'll go back and reintegrate the profile part of this trade, if I can find it. Here's ES, right? So you'll see on ES that we're just in fair pricing from yesterday, right? It's all the way down, and then the unfair pricing's up here where we're running into trouble now, right? But then there's overnight fair pricing. We won't worry about that. On NQ, we just got to the bottom of the overnight range, and they found responsive buyers. But that's because we have a weak downside and a weak upside, meaning there's no pressure one way or the other, right? So when you look at it from this perspective, you'll go, well, let's see if we can get into that 16722 area, which is where unfair pricing is from overnight. And really what you'd like to do is swing this whole area back down to unfair pricing. The reason day traders have difficulty is there's so many ways to look at it, right? There's so many ways to look at it that it can be just plain out confusing, right? So I'm trying to do the opposite. I'm trying to go for, let's simplify. We'll use this as our bias, right? We know the 5-day moving average is up here. I keep saying 15-day, but it's 5. 5-day moving average is over here, right? We've got to establish above. We knew that yesterday was trend day up. It's not likely to completely reverse a trend day up with a trend day back down. They attempted. There was no sell interest underneath the 5-minute low. They attempted 1, 2, 3 shots at it, right? They attempted. Now they've gotten back above. That's good market data. And then we're missing the element of speed. That's okay too, right? I was speaking to someone early this morning, and I was saying, if you just take away your big down days, I know it's frustrating to show up and sit here and go, well, I didn't take a trade one way or another. I'm acknowledging that. I'm not saying no. I'm not talking my own book, right? But if I can get rid of your big down days, not even your moderate down days, just your big ones, just get them out of that book, right? This doesn't become so intolerable because you're more interested on the days where you make money. You really are. I promise you are. You're just like, hey, I just want to make money, right? But if you keep pressing, right? If you keep pressing to the point of where it's like, hey, it's got to be, every day's got to be a great day, and if it's not, it's going to be an ugly, fat, ugly day, because we're going to put our guys have this intensity. I'm going to put an intensity into this, right? The intensity backfires on us, right? Now, where the intensity moves is when the market's hustling. And you can get close up and look for the turn, and the turn will give you 30, 40, 50 points, but like repeatedly, like it's up and down hundreds of points. That's where my intensity really benefits me, but my intensity bites me in the ass when I sit here and I try to read direction, right? So I can trade from principles. Longs over shorts, right? longs over shorts, number one. Number two, specific setups, high probability setups, right? Number three, look for location on the charts of where it's likely to get to. Number four, identify when it's quote unquote my market, right? And because I only need 10 months out of the year, 4 days out of the week, and $300 a day across 20 accounts, or reverse that in your own account, even if it's your own account and you're starting out, $300 a day still gets you to 50K on the year, right? I know for most of us that's not enough to live, but it's enough to grow an account, right? You may struggle for a year, but after you get that 50K, now you can go to 4 accounts, 4 contracts, and you're going to get a runner on some of that stuff. And in your own account, you don't have to worry about the drawback or the trailer, right? Once you get rid of that trailer on Apex, you actually can push further on these trades because you don't have to worry about the penalty, right? So my suggestion is we're not trying to be perfect. We're just trying to get it when it fits our requirements of what we're looking for, right? And then we're staying flexible. Above that 5-minute, buyers are in control. Imagine if I said, well, there's no way they can go straight up. Who among us hasn't come in here and started guessing, oh, that's exhaustion, the next bar's down. Oh, the next bar will be down. Oh, the next down bar will be the reversal. No, we now need it to come back in here and give us the setup. And if it doesn't, it's got to be okay with us, right? Or we got to find a process that lets us get paid and not get constantly, have big down days that wipe out all our profitability, right? And if you look at this, so if someone came into the room on Monday, right, and they watched my trading from yesterday and today, they'll be like, this guy can't trade, right? I haven't pulled the trigger on anything. I'm sitting here watching just the market going up and down besides my read. I haven't pulled the trigger, right? But if you came and looked last week, you'd be like, man, this guy's on fire. He knows what he's doing. He's getting, like I had a great week last week, right? What that tells you is I do best in PA from last week, and I got to minimize damage and try to tack on a couple of dollars if I can in this environment, but not give the money back in this environment. That's very, very important. So that's my 2 cents. I hope that helps, guys. I don't want y'all losing money when there's no opportunity to make the money either, right? And we just do need the market to be a little bit of a Goldilocks market for us, right? So, Greg, this is where if you get frustrated, right, you can draw down those Apex accounts really fast. You don't want to do that, right? Nate, same with you. So Nate's a good example because he has limited time to trade. Well, we're just not moving up and down very quickly. So Nate, you got to just digest that and go, okay, not going to pay me today. That's not a reason to donate a couple of K to the market. Same with you, Sean. It's not a reason to donate money to the market because it's not giving you your setup. We've got to hold on to the money we take from them. And then when the market sets us up and the opportunity we're looking for, we go freaking rob them blind. And in the meantime, have a book on audio or something. Pop on your headphones, listen to your book, write down your notes, and know that when this thing moves, we'll get paid. There's no one in the room who doesn't get paid. The only difference is there's plenty of people in the room that when we don't get paid, force their hand. Less and less as we go through. But that's what's making the big difference in this. Thank goodness for hot coffee. So with that being said, I'm going to pop on my headset, throw on a little bit of relaxing music, and I'll watch. They're pushing down very hard up here. I would expect a backside test that 5-minute level now. Somewhere in here, maybe not immediately, but I want this at the 4th channel, right? Not the top channel. I have to be able to capture momentum to do that, and I hate that. Now, just again, I'm not encouraging the short. I'm just going through the process. That's what I have in front, right? Oh, never mind. This guy's my stopped out buyer. So I've come back and touched that point of control. Now a down bar should fall away. The problem is, well, it's not a problem. It should just fall back into this 5-minute range here, right? So that should be a 1-bar stop against this, right? So then the question becomes, where do I want to see this? Here, here, here. What does it do afterwards? So I can learn and watch in real time. Okay, I got the down bar. That should fall away. What would be a natural target? Well, every Yahoo with a retrace thing. So right back into the mid of balance would be the target, right? So now we can watch how it plays out. Even if we're not trading it, we can learn from it, right? So now the basic retail guys are the guys that use 5 minute balance are just looking to trap off the top of that 5 minute, right? You can see them coming in going, oh, there's the 5 minute high, I'm going to go long. That's all right. There's nothing wrong with that. There's just not a massive amount of edge in it for a high consistency. You need to see the volume piece as well. And where I want it, I know where I want it, right in here. I want some part of this trap to attach to that fourth channel. And there's so little participation that that works here, right? Because there's just no speed to it. And Ed had a great point when there's no news and no direction, and we've taken down, we can't take the low, and we've taken out the high. He goes, but the PA tends to get sloppier as the day went on, and I agree. Well, guys on YouTube, I appreciate it. It was a slow morning. We couldn't get enough volatility around this 5 minute to really generate a good trade. So we're looking for longs if it steps back in here, and we're just relaxing until then. Not much else to add, and that's okay. We didn't get back any money. No one's down, and we still have opportunity. And if not today, tomorrow.